Good afternoon and happy Labor Day weekend coming up to you all. We got quite a bit to cover ahead of the three-day holiday weekend here with jobs, inflation, and an awesome question of the week asking, is the golden age of investing over? So stay tuned to the end. I want to make sure that you catch kind of what we're going to address with this news story that's come about and a great question that kind of came into our arena here this week. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. So again, we have jobs and inflation at the core of our conversation here this week. But before we get into that, let's talk a little bit about Fed Chair Powell, which tees up a lot of the data we got here this week. So last weekend was the Jackson Hole conference, and Fed Chair Powell was there and shared some comments as he does every year. And at this Jackson Hole event, basically, Fed Chair Powell had highlighted how much work they still have ahead of them and how difficult that work is to kind of combat this inflation issue that obviously is still relevant, right? So there's a lot that was in that speech to unpack, but I think the biggest thing that I'll kind of share, the big takeaway maybe, is that he is still suggesting that inflation is too high, and certainly suggesting that further rate hikes may not just be on the table, but are likely going to be necessary. So I think this is something that the bond market has really paid attention to, and I think gotten a lot more accurate than the stock market, because I think that the stock market is basically priced in the Fed being done, and in fact, even decreasing rates next year. But here we are yet again with the Fed Chair Powell saying that we probably shouldn't be expecting that. So we still have a few weeks until they share their decision and the press conference to follow, but certainly a sign of what may be coming here in a couple of weeks. On top of that, we have jobs and inflation data that came out this week as well to kind of tip the cards even further for that Fed meeting. So on Tuesday, we had job openings come out. Actually, job openings were down quite a bit from this giant number that we've had for the past year, almost 2 years probably. Still very high, don't get me wrong. There's still a lot of job openings out there, but certainly a much lower number than what we've seen lately. The question is this less hiring happening? Is there less jobs out there, or are more jobs getting filled? That is where we turn to the ADP employment reports, right? So let's put it this way. Job openings on Tuesday give us a sense of what jobs are out there and whether or not they're being filled. Fast forward to yesterday with ADP employment reports, and more importantly, I'll share this more here in a minute, but Friday with non-farm payrolls, these numbers tell us how many jobs are being filled, how many new jobs are being taken, right? So keep these two data points in mind, because they really do have an impact on one another and tell a little bit more of a story. Yesterday, ADP employment report came out and showed we added 177,000 jobs. So not a lot, and much lower than the previous few data points that we've seen from here. If this number is accurate, which again, we'll see, I would suggest don't put too much weight into this until Friday when we get the non-farm payrolls number. But if we see ADP employment report and the non-farm payrolls report on Friday, both showing that very few jobs were actually added through the last month, and we see that job openings have come down, this to me would mean that basically a lot of employers are taking job openings off the market. In other words, they're not hiring to the degree that they were. So the number tomorrow for non-farm payrolls is going to be really important to really piece this all together and really start to put together a bit more of a clear story. So definitely tune in for that. And of course, we'll cover that next week as well. On top of that, today we had personal income and spending come out. Personal income was up slightly, basically in line with expectations, but personal spending was up big again. So certainly a discrepancy still between income and spending as we continue through some of these inflation challenges. We also had inflation data come out today. So PCE index was up 0.2% for the month, and core PCE also up 0.2%. Which was the same as last month, but it does mean that it brought up the year-over-year numbers for both of these. So in other words, the annual inflation numbers actually came up slightly because of this continued 0.2% rate on the PCE numbers here today for last month. So inflation is definitely still here. And again, when we couple that with, we'll see here in a minute, but still a very strong jobs market, even if we find out that there wasn't a big non-farm payrolls number tomorrow, and the Fed chair Powell sharing that they've still got a lot of work ahead of them. Signs are pointing to, if not a rate hike for that meeting, at least a lot of conversation and a lot of tipping the cards that they may do it in the following. So we still have a couple weeks. There's still more data to come, but nonetheless, this week was very telling of what may come in that September meeting. All right. Our question of the week this week is a great one. And the question is basically, is the golden age of investing over? And this came from a news story, but I also want to highlight there's a couple other factors into this as well. A lot of questions lately around tech stocks. Are tech stocks over? Is the buzz around AI over? Are these giant, Netflix, Amazons, Googles of the world going to kind of peter out here? And on top of that, we've also had a lot of layoffs lately. Like T-Mobile, I think, laid off about 5,000 people recently. So layoffs that conversation is starting to pick up again here as well. So I think all of these three things are very much tied together and very, very relevant with all these news stories that we've been seeing over the past, let's say, month or so. So again, coming back to the main question, is the golden age for investing over? I will share that I do not think that's the case in any way, shape, or form. Obviously, you can go back, as far as you would like, and you can always find these types of stories when things slow down. There's always the question: does this system work? Is investing done? Are we going to, lose all the luster? Especially if you go back to like the high flying, 80s kind of 90s time frame, there's a lot of that conversation going on. After 2001, obviously a lot of that conversation going on. After 2008, a lot of that conversation going on. So I would argue that it certainly is not. Now, to tie this into the tech conversation and the layoffs, what I would suggest is that things have gotten very, very frothy for a lot of companies. Now, these companies are very strong. They're run very well, and they have, great systems in place to continue to grow. However, just like any other time in history, what happens a lot of times is as time goes on and we have these giant run-ups, these 5 names, for instance, become a giant part of what makes up our market, right? And so it's really important to break this apart, because if you look at the S&P, a lot of times those returns are driven by a few names today, because the S&P is weighted by the size of each company within it. So the 5 largest companies make up a big portion of the S&P right now. So when we talk about tech being over and AI, I wouldn't say it's over. I think that you need to be selective in where you find these opportunities. But nonetheless, it makes up a giant portion these days of the S&P of the market. So if you look at broad swaths of the market, certainly when tech has troubles, so does the market. But if you look for more quality companies and find some opportunities within there, there is a lot going on there as well. So I think that it's important to kind of couple those things together. I would definitely suggest that the golden age for investing is not over. I do expect that it's likely maybe we run into a period of some slower returns, right? Doesn't mean returns are going away, but when you go back to 2020 and 2021 of these, 20+% market years, I think that likely is not necessarily going to be the case for too much longer. We might go into a period where, we're a little more in line with historical averages or possibly even a little bit under that. But nonetheless, still opportunities within there. And again, if you zoom out further, I would argue that, we can certainly see more booms and busts to come in the future as well. It's how the markets react. And there's always, a lot of emotion, especially when things go the other way. But if you look at this year alone, this year has been a great run, not quite back to where we were pre-2022, but nonetheless, been a great run in the markets here for 2023 from where we started. So very good question. Thanks so much for sharing that. And I think there was a lot to unpack there. So thanks so much for joining us for this little longer weekly update. But enjoy the holiday weekend coming up. We will touch on non-farm payrolls next week. And then, of course, markets are closed on Monday for Labor Day. So enjoy the long holiday weekend. No trading on Monday, and we will see you next Thursday at 3.